Yeah, Brian, good to be on your show again, and look forward to Wednesday night, by the way.
Thank you.
The last 4 months, WTI has bounced around between $73 and $80. It's at 80 today. So the question is, when are we going to break out? What's going to cause it to break out? So after China's Congress ends, April, demand expected to increase in China 800,000 to 1 million barrels a day by the end of the year. Also, if you look at U.S. production, what it's done, everybody said it's going to add 1 million barrels a day this year. The EIA just came out with December 21 to December 22. We only added 500,000 barrels a day in U.S. production.
So there's a couple things there that Scott is pointing out there. First off, I appreciate Scott for being honest about what's happening right now. So he's been pretty accurate. I've looked at past news, and Scott's been pretty accurate about warning the world. Listen, I don't think shale is going to produce near as much oil as what we was expecting, because there was the EIA and many other people in 2022 last year were saying that, hey, by 2023, we're going to be producing about 14 plus million barrels a day in the U.S., and we're only producing about 12.2 million. Okay. And so they're way off. Okay. And so this year they're expecting to add 1 million barrels a day. Well, they only added 500,000. So here's, and the thing is, he keeps talking about, listen, we're bouncing around $75 to $80 per barrel, but we're about to break out because of China. Well, he's right. But listen, we are like, the oil and gas industry is like the little boy that kept crying wolf. Nobody buys the story anymore. Now, for the first time, we have data that backs up our comments about China's demand increasing. Industry data, travel data, everything points to they're importing much more oil. Okay, but the markets don't know what to do with that. And so you're not having as much capital being thrown at the oil and gas industry because they're not buying it. Okay. And so if you look at this inflation calculator, okay, if you compare 2023 to 2008 and plug in $75 oil, which that's what it is today. Right now, Brent crude is trading at $75 per barrel. So if we put that in 2008 dollars, it's actually $53.98. So convert 23 to 2008, it subtracts 28% of the value because of inflation. So in other words, in 2008, a $75 of oil would have been $53 a barrel. Now, when we had the housing bubble, when we had the largest financial crisis the world has ever seen, oil prices crashed down to $43 a barrel. We were $10 shy from oil prices being the lowest they've been since 2009. Shale cannot profit at $75 oil. It's not profitable. That's why you're only seeing an increase of 500,000. And now they're tapping into tier 2 and tier 3 assets. It's only going to get worse. Let's listen in more on what Scott has to say.
Doctor. Well, that's what's frustrating the White House. And isn't that your job, to add more production? That's what we're being told.
No, our model has changed. We have service costs.
He just asked a direct question. The White House is calling on shale companies to produce more oil. And he said, isn't that your job, to increase oil output? And his immediate response is no, we've changed our model. In other words, listen, we're not profitable to increase oil production because, number one, we don't have tier 1 assets anymore. When I say tier 1, tier 2, tier 3 assets, I'm talking about the easy to get to oil, the more fruitful oil is gone. The tier 2 assets, you're going to have to spend more money in lesser fields to extract the oil. Some shale companies are extracting out of tier 3 assets. Now, they ran out of tier 1 assets quickly because they fired up the printing presses. What should have taken a decade, they knocked it out in months. And so I find this so fascinating that the world isn't shocked to hear that one of the largest shale companies out there is saying, look, it's not my job to increase production. We've changed our policies. That should tell you, listen, we're not profitable. And every time we spend more money to develop, we lose money. So it's like a batter going up to bat. and he misses over and over again, and he doesn't want to continue to destroy his batting average, so he keeps benching himself.
We're up significantly. So you look at the free cash flow. Our estimate of free cash flow was $8 billion last year. The number we printed is going to be $4 billion at $80 for 2023. So inflation is up. All prices are down. So people just don't have the.
Yes. So what he's saying is, so last year they had $8 billion. This year they have $4 billion. And so they have half the capital to spend on CapEx, on development. And he blames it on inflation, and he blames it on the fact that oil prices are low.
Capital to continue to grow.
You've got the capital to give back to if I'm playing the devil's advocate, if I'm in the White House right now, I say, Scott, you're printing money, record free cash flow, dividends, buyback stuff. You need to put more drills in the ground, pull more oil out, try to bring down the price of gasoline. Although I also address that. Do we have the refining capacity, even if we were to produce more oil, to produce more gasoline?
Yeah, we don't have the refining capacity. And secondly, we'll get back in the same cycle we had the last 10 years. If we all add more rigs, service costs will go up another 20, 30%. It takes away free cash flow. And secondly, we just don't have the industry doesn't have the inventory. Most companies are drilling tier 2, tier 3 inventory now.
Okay, so here he goes. He's blaming the fact that we don't have enough inventory. There's not enough good oil and gas leases to develop. And then he explains, look, even if we had the crude oil, we don't have the refining capacity to convert that crude to gas, because one of the many byproducts of crude oil is gasoline, is jet fuel. If you don't have the refining capacity to refine crude oil to gasoline, these large companies like Chevron and British Petroleum that have refineries are losing a tremendous amount of money on their crude. And so instead of taking their crude, their raw crude, sending it to the refinery and then selling it on the market, those barrels of oil just sit in tanks. They're not making any money for years down the road until they convert it to gasoline. As where smaller oil companies like me or some of these other mom and pops, we sell the raw crude directly to refineries, and they write us a check. I'm not at the mercy of waiting until it's converted to gasoline or jet fuel or plastics or the other 6,000 byproducts of oil before I get a check. I sell the raw crude. Okay. So that prevents shell companies. It dampens the excitement to go out and develop even more leases. Okay. And then he goes on to say if we keep adding more rigs, all the servicing costs is just going to go up 20 to 40%. So he's given several reasons why shell companies are not going to spend any more capital on development. I'm telling you right now, we're not going to have enough oil for tomorrow.
So we just don't have that potential to grow U.S. production ever again. I think we may get back to 13 million barrels a day, probably in about 2.5 to 3 years at a very slow pace.
Scott, it's Kelly here. I hope you can hear me okay.
So he's saying that we might get back to 13 million barrels of oil, which was the peak, the most the U.S. has ever produced here in the next 2 to 3 years. Okay. The EIA and many, many other companies were saying that we are going to hit levels of 14 million barrels a day in 2024. The EIA should be going on public record and apologizing to the world. All of these news outlets that falsely claimed that we expect to see 15 million barrel a day output. How is it that a guy like me that does not have the amount of capital to have analysts and a team to evaluate and calculate and extrapolate how much oil shell companies are able to produce, and I was able to figure it out? Shame on you, EIA. You really got to ask yourself, who is the EIA working for? They were completely wrong, okay? And so what's amazing to me is this truth is out. The truth is out. Shell companies are finally starting to admit to the fact that they do blame a bit much on inflation, on oil prices, on tier 2, tier 3 assets and all of those other things. But at the end of the day, if you watched my channel like 2 or 3 years ago, I was telling you shale is a flash in the pan. It's the most expensive barrel of oil to produce. Now look at the situation we're in. I've been sounding the alarm bells for years, and here we are. Okay. Now, nobody's investing, even though that this is the greatest news to push the price of crude up. I mean, oil prices are only $50-something a barrel. 75 looks like a lot of money, but at the end of the day, the price of crude is too low for shell companies to profit in tier 2 and tier 3 assets. Guys, we are in a mess. We're not going to have enough crude for tomorrow. The shell companies are just producing oil from older wells, and they're holding on to their free cash flow. They're not spending it on new development, and they're sending that money back to investors. But the problem is you can't keep doing that forever. At some point, shell companies, all of their production is going to go to the wayside, because every year they're seeing a decline of 45%. 45% of their revenue is being lost each year if they continue to not develop like they should be. I'm telling you right now, I won't be surprised if this time next year, we're still at 12 million barrels a day. Where's the oil going to come from for China? I mean, we're seeing a reduction in production from Russia. We don't have the Strategic Petroleum Reserve to bail us out anymore. We don't have shale to bail us out anymore. We don't have OPEC to bail us out anymore. We don't have any countries that are making a significant dent in demand, and population is growing. We're at 8 billion people for the first time in human history. The demand for oil is growing. I think they're wrong about the demand for oil. They're saying that we'll be around 102 million barrel a day demand by first quarter of 2024. I think that number is going to be higher, just like I think the shale production is going to be lower. So guys, comment below if you think I'm completely dead wrong. Comment below and let me know. If you have any great news or news sources or news articles or videos, please send it my way. I'm Sean Pruitt, president of Kingdom Exploration. If you like this channel, please subscribe, and we'll talk soon. Thanks.